SBA loan programs and things like that that are in this bill. That's really not modeled necessarily off of any other existing SBA program, because this is just something that's so new that we've never had to deal with as a country. And so there's a lot of learning that needs to take place, and a lot of kind of going through this bill that we're still in the process of doing. But I want to make sure that everybody on the call understands that the purpose and the intent of Congress in doing this bill was to get as much money as humanly possible back into the economy as quickly as possible. So this is a massive, massive spending program. Like I said, 10% of GDP. The main portion that I'm probably going to focus the most on today is that Paycheck Protection Program that's specifically geared for small businesses. That's a $350 billion loan program. And I know that numbers get thrown around in DC a lot, so much so to the point where, you know, they seemingly have no meaning anymore. So what's $350 billion mean anymore, right? But just to put that in perspective, that is roughly half of the overall total payroll costs of every small business in the United States of America for an entire quarter. So that is a massive, massive sum of money that Congress is trying to pump out immediately. And the intent is for the SBA to get this money essentially to banks that are qualified as SBA lenders to be able to lend to their clients, and to be able to do that as soon as possible, as early as potentially even this Friday. That's something that Secretary Mnuchin has said he wanted to see, you know, for small businesses and nonprofits to be able to apply for this as early as this Friday, and for, you know, applications to go in and for loans to be received on the same day. Extremely ambitious to do that, and I'll believe it when I see it, but that is the intent. And so it's important to remember that that's really what Congress is trying to do here, is they're trying to backfill the economy and maintain liquidity at a point when small businesses and businesses of all sizes really across the country are suffering tremendously, and we're having a liquidity crisis, and we're seeing huge spikes in unemployment. We saw last week, 3.3 million unemployment claims, an all-time record. I think the previous record was something like 700,000 in a single week. So this is a big problem, and this bill attempts to kind of remedy that situation. And the intent, like I said, not only to get a lot of money back into the system, but to keep employees on payroll. So this is trying to make it as easy as humanly possible for employers to maintain their payroll and to retain the workers that they have and keep them tied to their employers, certainly for healthcare purposes, because we have over 150 million Americans that get their health insurance through their employers, but also so that when we get out of this crisis in a month or 2 months, hopefully it'll be sooner rather than later, the economy can get back up and going as soon as possible. And we're already going to have folks on payroll. We can bring them in seamlessly, and we can kind of get the economy back up and going. So that's the intent of this bill. Like I said, it's 900 pages. There's a lot in here. I'll try to go over some of the major provisions, and I'll specifically touch on that Paycheck Protection Program, because I think that's going to be most relevant to everybody that's on this call. But first off, I'll talk about some of the provisions for individuals, which has gotten a lot of attention. The idea of doing these checks that are going to be direct deposited into folks' bank accounts. So that, as many of you have heard, is at $1,200 per individual. This is for an individual filer. They'd be able to get a $1,200 check, essentially direct deposited into their bank account. And that's for folks that are that have incomes up to $75,000 a year. And after $75,000, this begins to be phased out. And so for folks, individuals that make at least $99,000 a year, they will not be able to get access to that $1,200 check. But for folks that are under 75, they can get the full amount. And then between 75 and 99, you'll get kind of a diminished amount of some kind. And for joint filers, they would get access to a $2,400 direct deposit check. And that's good for joint incomes up to $150,000 a year. And then at that point, it starts to phase out, and then up until you get to $198,000 a year. After that point, joint filers will not be able to get access to that $2,400 check or any money at all. And there's also a $500 per child credit in there, or check that would be delivered as well. And the same eligibility requirements for income are also applicable in this case. And this is going to be based off of your most recent tax filing. So for most of you folks, it'll be based off of tax filing from last year. So just to clarify that point. And the checks are expected to be rolled out relatively soon. I heard that the target date that they've set is right around April 17th for people to see those direct deposits. And this is going to work very similar to the program that President Obama initiated in response to the financial crisis in 2008, 2009, where folks got a $600 check. So it's going to be very similar to that program. There are also expansions in unemployment benefits as well. So unemployment has been expanded according to the CARES Act by 13 weeks. So eligibility will go from 26 weeks to 39 weeks. And there's also a bump of $600 per week on top of the regular state benefit. So this, of course, varies by state, but whatever the normal unemployment insurance benefit is by state, you'd also be able to get an additional $600 per week on top of that. And this is only for folks that are unemployed specifically due to COVID-19 crisis. So that's if they got laid off because of COVID-19, because their businesses had to lay them off, or were shuttered due to COVID-19, or due to even an emergency declaration by the governor, things like that, where non-essential businesses were shuttered and they were laid off and are no longer kept on payroll. Then they would be able to have access to this unemployment insurance, this increased benefit of $600 per week. And the coverage period for this unemployment insurance kind of revamp is retroactive. It goes back to January 27th. So if you were laid off in February or early March before this bill was enacted, and if you were laid off because of COVID-19, then you would still be able to retroactively get access to those unemployment benefits, as well as a $600 per week bonus. And the $600 per week, that does, however, expire on July 31st. So even though the other changes on insurance will go from January 27th through the end of this year, that $600 per week addition only runs through July 31st. And it's important to note too that eligibility for folks that are getting unemployment insurance will automatically expire once they get an offer to return back to work. So if they're getting unemployment insurance because they were laid off, and then their employer, once the economy gets kind of going again, their employer approaches them and says that they can have their job back, then if they choose not to take that, then they're no longer eligible for unemployment insurance at that point. So that's an important point of clarification, because I know that that's led to some confusion over the last week or so. And then benefits are provided, of course, through state unemployment insurance offices. But that's kind of the case. And then also it's important to note that independent contractors, sole proprietors are also eligible to apply for unemployment insurance, and will be able to get access to the additional $600 per week on top of the regular state benefit. There are also some major kind of tax provisions as well that I'll go over that apply to all employers. This is for small, medium, and large employers. They can get access to some of these things. So I'll talk a little bit about that, and then I'll talk briefly about some of the things that are in the package for larger employers, some of the loans and loan guarantees specifically that they can get access to. And then, like I said, I'll focus most of my remarks on the small businesses and specifically the Paycheck Protection Program, and then the SBA's Economic Injury Disaster Loans, or EIDL program. For payroll taxes, that's an interesting benefit that's included in this bill. It gives all employers, regardless of size, the ability to delay or defer payment of their payroll taxes. This is the 6.2% Social Security tax between now and January 1st of 2021. If they decide to do that, then 50% of that amount that they've deferred would be due by December 31st of 2021. And then the other 50% would be due by December 31st, 2022. So essentially they'd have 2 years to pay back those payroll taxes. And this applies only to the employer's payroll tax obligation and not to the employee's payroll tax. So those remittances will continue. However, it's important to note that if a business decides, particularly if you're a small business and you decide to take advantage of the payroll tax deferment, that you are not eligible to have your loans forgiven under the Paycheck Protection Program. So that's something that to keep in mind if you're planning to apply for a loan under that program. You can't do both. You can't have that and then also defer your payroll taxes. Some of the other important tax changes in here, net operating losses can now be carried back for 5 years. So net operating losses in 18, 19, and 20 can be carried back for 5 years. So you can count that against your tax liability, which should help folks with liquidity. And then another important thing too is it made a fix to the qualified improvement property issue that was an issue that came up in the Tax Cuts and Jobs Act in 2017 that due to a drafting error, it really precluded especially restaurants and retailers that had made improvements to their businesses. They weren't able to get the deduction on that, the bonus, what they call bonus depreciation. They weren't able to access that right away, and that was due to a drafting error in that bill. So the CARES Act fixes that and now will allow those businesses that have made those improvements to their properties to be able to get immediate 100% access or 100% bonus depreciation, and so access to that deduction, which once again should help with liquidity. And that's kind of the major theme here, is that everything that's for the most part in this bill is designed specifically to increase liquidity into the system. Another important tax credit that has kind of gone under the radar because it was added at the last minute in this bill is the employee retention credit. Like I said, liquidity is huge, and the other big intent of Congress here was to keep employees on payroll. So there's this employee retention credit that all businesses can get access to regardless of size. And this is specifically for employers that have been fully or partially shut down due to COVID-19 or have seen a 50% drop in gross receipts in a quarter compared to the prior year. They would be able to get a refundable tax credit for 50% of the wages paid by the employer to the employee, and this would go up to $10,000 per employee. And the wages also includes sick leave benefits, health plan expenses, things like that. So this is kind of a way to think about it, is it's essentially up to a $5,000 tax credit per employee that the business would be able to get access to, assuming, like I said, that they have been fully or partially shut down or saw a 50% drop in gross receipts in a quarter. And they'd be able to continue to maintain access to this credit until they return to 80% of business. So until they get to a point where they're at 80% or above of the gross receipts from the prior quarter, they'd be able to to get access to this employee retention credit. There's also, it's important to note that there are different rules depending on the size of the employer. So for employers with more than 100 employees, if they take advantage of this employee retention credit, it will only be used for employees that are not providing services. So essentially employees that have been kept on the payroll but are not actually working, where employers just, they wanted to keep them on the payroll, but don't have a spot for them necessarily to do work or provide a service. Those folks are the only ones that would be counted for this tax credit, and that's for employers with at least 100 employees. For employers with less than 100 employees, they'd be able to apply this tax credit for all of their employees. And once again, similar to the deferment and payroll tax, this is not eligible if you receive a loan through the Paycheck Protection Program. So that's, once again, something to keep in mind. And this tax credit, by the way, is something that Treasury is very aware, once again, with the intent to get liquidity reestablished as soon as possible. They are working to kind of figure out ways that they can make this payment in advance, essentially, so that businesses don't have to wait for a quarter to get access to this credit, that they can get this money up front. So that's currently in the process right now. Treasury is working on that. For mid-size and larger employers, this is kind of a huge part of the bill. There's about $500 billion specifically that provides for loans, loan guarantees, and support through other what they call credit facilities that would help middle-sized employers, large employers, as well as states and local governments. About $50 billion of that is used specifically or is geared specifically for the airline industry, for cargo, and then also for critical national security businesses. So that's folks that are involved specifically in the supply chain for our national defense and national security. So essentially you have about $450 billion after you take out those programs, $450 billion left over for everybody else. And the restrictions on this are that they can't engage in stock buybacks, dividends. There's going to be caps on executive compensation and other oversight measures as well to make sure that the money is being spent appropriately. And so we'll see kind of what some of the Treasury is still kind of working on exactly how these credit facilities in particular are going to be set up. But that's an important point to note. For large businesses, they will be able to get access to a fair amount of assistance. And then I should also note that for medium-sized businesses, there's going to be something called a middle market loan facility. And that's for employers with between 500 and 10,000 employees. They'd be able to get access to a loan that would be capped at 2% with no principal or interest paid for the first 6 months. And the funds must be used to retain 90% of the workforce at full wages and benefits through September 30th of 2020. So that's for middle market folks, and I know that there are quite a few businesses that would be eligible for that. So now moving on to the Paycheck Protection Program, which is the biggest part, undoubtedly, of this bill, or at least the part that's getting the most attention, and certainly from the chamber community. This is the $350 billion loan program for small businesses. And so these are businesses with generally less than 500 employees. And it's also eligible for nonprofit 501c3s and only 501c3s. So unfortunately, 501c6s and other nonprofits were not included in this language and do not have access to the PPP program. But it's also eligible for self-employed individuals, sole proprietors, and independent contractors. The way that it's determined exactly how many employees you have is they'll look at last year. So they'll look at a period between February 15th and June 30th of 2019, and what is the average number of employees that you maintained, and that will essentially determine the size of your business and how many employees you have. So just in case that question comes up on how do you calculate 500 employees or less, that's how they're looking at it. The amount that the business would be able to access, the maximum amount would be the lesser of either 2.5 times the monthly average payroll, so 2.5 months essentially of average payroll, or $10 million. And so it's important, if you're a business that's going to apply for this PPP loan, that you think about what your average monthly payroll costs are, or particularly were, because they might be very different now than they were just a couple of months ago. But that the amount is going to be determined based off of the average monthly payroll costs that you had the year before. As I understand it, there's been some confusion exactly how this is going to be calculated, but as it looks in the language of the legislation, that's how it would be. So if you got a loan on April 5th, you'd look all the way going back to April 5th of 2019. What is your average monthly payroll cost between now and then? And that would determine what your monthly payroll cost is. You multiply that by 2.5, and that would determine your maximum amount of loan. However, folks that are making in excess of $100,000 a year would not be included in that calculation. So, and there's some confusion on that as well. It doesn't mean that that those individuals are entirely taken out of the calculation. It just means that for compensation that exceeds $100,000 per year, that is not part of the calculation. So I know that there's some confusion and probably an opportunity to talk specifically to your lender on that issue. But that's kind of how the total loan amount is calculated. These loans are going to be made by local and national lenders, by lenders that have been SBA approved. I think there are something like 1,800 lenders across the country that are qualified under the SBA 7A program to provide these loans. And I know that the SBA and Treasury are working with just about every financial institution, every FDIC-backed financial institution in America, to make sure that they can offer these loans. They're 100% backed, so it's very different from a typical SBA 7A loan, which is only 75% backed by the federal government. This is 100% backed by the federal government, so there's essentially no risk for banks to be offering these loans. It doesn't count against their risk retention. So this is kind of a win-win scenario for banks, and so banks have really been eager to kind of jump at this opportunity. It makes it a lot easier too, to the fact that we don't have SBA administering this directly, and that folks can go directly to the banks and to the lenders that they usually work with in order to get access to this money. And like I said, the intent is to get this up and going by this Friday on April 3rd. I saw guidance from Treasury that mentioned that, and then they were hoping to get sole proprietors, independent contractors able to file applications by next week, by April 10th, Friday. So hopefully we can get this up and going as soon as possible. There are really minimal requirements on this as well. No collateral, no personal guarantee. Doesn't matter if you have access to outside credit. That's usually kind of something that comes up when you're dealing with the SBA. That's been waived. So very minimal requirements. The special part about this loan, of course, is the fact that it does convert into a grant if it's spent on payroll, rent, interest on mortgage, utilities. If it's used for those purposes for the first 8 weeks after the origination of the loan, that amount will roll over into a grant and will be forgiven. So it'll be important if you apply for this loan to just document how you're using the money over those first 8 weeks in particular, and then to petition your bank afterwards for that money to be rolled over into a grant. And then any money that you have left over from the loan, that would be subject to the original loan terms, which would probably be about 4% interest rate, and the term would go up to 10 years. And then there doesn't have to be any payment on the loan for the first 6 months and up to a year. So those are the terms for the part that does not get converted into a grant. Loan forgiveness, however, is reduced proportionally if the employer reduces the number of full-time equivalents. And then also, if the employer reduces wages by more than 25%, loan forgiveness is also reduced proportionally. So that's something to keep in mind. And once again, the intent of the bill, after all, is to keep people on payroll. And so that's why those provisions are in there. They really want to make sure that this money is used for that purpose. And it's also important to note that even if an employer, laid off staff, over the last couple of days and weeks due to COVID-19, if they were to get access to this loan, they get this loan, they are able to bring back those staff members in order to get that loan forgiven and turned into a grant. Now they'd have to bring back those folks and restore their wages generally within 30 days of the enactment of the bill. The bill was enacted, like I said, on March 27th. So essentially, if you're an employer and you had previously laid off some folks and you want to bring them back, you'd have to do that before April 26th and then maintain them through June 30th of this year. And if you do that, then your expenses for that would be forgiven. So those are some of the highlights of the PPP program. We have a lot of information on that you can access through our website, uschamber.com. We have a 4-pager that is really useful for small businesses to kind of work off of to determine what they should do and what their eligibility looks like. And then also, I talked a lot about Treasury and kind of their guidance. We're still waiting for a lot, but we were able to see yesterday what the application looks like. And it's pretty cool in that the application for the PPP loan is this document here. I printed it out. It's 4 pages, and it's really only a page and a half of filling anything out. The rest of it's just kind of terms. But the page and a half, it's essentially yes, no questions. There's nothing on credit. It's about the easiest document you can imagine for something like this. So, and that just underlines the point that they really want to get this money out as soon as possible to anybody that needs it. And they're assuming that just about everybody is going to need assistance. So please check that out. That's on Treasury's website. We have documents too. We can get that out to you if you're all interested. I could work through Sally to get that to everybody on the call if you're interested in that. The other program for small businesses that I should highlight, lastly, is the Economic Injury Disaster Loan. This is the SBA's EIDL program. And this is a pre-existing program. It's been around for a while, but it was beefed up in the CARES Act. And so what this does, it allows for small businesses and nonprofits. Now this includes all nonprofits, not just 501c3s, but also 501c6s. So chambers, anybody else that's qualified as a nonprofit, they'd be able to get access to this EIDL loan. And this is once again for small businesses with fewer than 500 employees, sole proprietors, independent contractors, self-employed. They'd also be able to get access to the EIDL loan. This is for up to $2 million in working capital. So that's the max, $2 million for working capital, and then up to a 30-year term, and at fixed interest rates of 3.75% for small businesses and 2.75% for nonprofits. Payments are deferred for up to a year, so no payments for that first year. And then loans are based off of credit scores, no tax returns required, very generous terms in general, and the fact that a lot of the typical restrictions that you see have been waived or changed substantially. So you can get up to a $200,000 loan without a personal guarantee. You can get up to $25,000 with no collateral. So those are some big changes. And the credit score issue too has come up a little bit. And you know, it's important to note too that this bill precludes folks from getting dinged, at least over the last couple of months, due to inability to pay things or to meet their credit obligations. So, you know, hopefully there won't be an issue with folks' credit scores, and so that won't be an impediment to getting access to the EIDL loan. And another really important part of the EIDL loan is the fact that, and this was included in the CARES Act that didn't exist previously, is that there's a $10,000 emergency grant that folks can get access to. And once again, this is an emergency grant that they can get access to within 3 days. They don't have to pay it back. And it's right away. It's a cash advance within 3 days of applying. They can get that, and they can get it even if they're denied the EIDL loan that they're trying to obtain. So that's huge, and that could be used to pay for payroll and you know, rent, you know, interest on mortgage, utilities. But what's also important to consider about the EIDL loan, and what makes it different from the PPP loan, is that you can also use it for other things, such as supply chain disruption, or if you have outstanding debt that you are not able to meet due to a reduction in revenue, you could use the EIDL loan for that as well, whereas those things cannot be used by the PPP program. Which kind of segues into the next point, that you can in fact apply for the PPP and the EIDL. However, you cannot use the money for the same thing. So for the EIDL, like I said, you could use that for supply chain disruption, increased costs due to that, and then use a PPP loan for payroll costs, rent, utilities. But you have to make sure that they don't overlap, because the government obviously wants to make sure that folks are not double dipping on that end. But the EIDL program is something that I think people should look into. And it is different, you know, the fact that it's not forgivable, you know, for some folks, that's kind of makes it less appealing than the PPP. But then, you know, the fact that it's a 30-year term, and then, you know, it's more for kind of capital intensive industries as well. So you know, it's something that as a business, you might want to just kind of take a look at and run the numbers. How does the PPP help me? Because it is the amount that you're eligible for is really based off of your payroll costs, and then how does the EIDL loan help me when that payroll part of the equation isn't as important. So just something to think about. These are obviously conversations that we encourage folks to have with their lenders, because you know they're going to be the ones that you're going to be working with. But the point is that Congress really wants this money to be as readily available for anybody that needs it. And it's about as easy as you can imagine something like this would be, as far as just kind of getting access to this money. So they've really tried to make this as easy to work with as possible. So with that, I'll kind of wrap it up, I guess, and just take any questions if you all have any.
Thank you, Jennings. Bob's going to go ahead and read through the questions that have come through on the Zoom chat. And then once he gets through those, if anybody else has questions, we'll go ahead and have mics open up. So Bob, it's all yours.
Hi, everybody. Thank you so much. Just to let you know, if I do ask Jennings a question, he is unable to answer it. Sally and I will take that question back with us and then compile the answers and send those out as a separate message. So please make sure that you have RSVP'd for this meeting, or that you send Sally or myself your information to follow up with after we are concluded. Jennings, the first question that came in, How does one verify the direct deposit account that the money would be going to? This would be for the $1,200 loan.
That's probably a question that you have to ask your bank. But it should work. It should be pretty seamless. I mean, IRS and Treasury are working directly with the banks on this. But that's something you'd want to run by your bank personally.
Maybe based on last year's taxes.
Right, I would think, but yeah. Just to be safe, just talk with your bank.
Okay, so next question. Does the unemployment count against your business account? Sure.
As far as I no, but I can look into that.
Okay. Next question would be, any layoffs because now of the crisis that will go against the company's UIC experience and account? That might be
so could you clarify that exactly?
I think it's actually related to the previous question.
Yeah, it sounds right.
In regards to that, so does unemployment count against your business account based on the fact any layoffs now because of the crisis? Will that go against the company's UIC experience and account?
Once again, I don't think so, but I can double check.
Okay.
That's certainly not the intent of Congress. I know that, but I'll have to double check the language to make sure.
Okay, and this question came up, and I think this was I had answered it, but I wanted to give it to you to answer it for everybody. So for these loans, for the PPP loans, do we go to the SBA website or to our regular bank?
So for the application is accessible through the Treasury's website. So you can go there if that's the PPP loan. So that's the Treasury website has the application up, and then you would go to your bank. These are going to be fully administered by your bank. So you'd go to them to get the loan. For the SBA's EIDL loans for the economic injury disaster relief, that is through the SBA directly.
Okay. Next question, with payroll reduction, what about minimum wage?
What about minimum wage specifically?
So I would assume that if there's a situation where you reduce somebody's payroll in order to continue to operate, is there any impact on the idea of minimum wage?
Like wholesale changes to the minimum wage, or? Yeah. No, I don't think so. And then, even if you reduce somebody's pay in response to the COVID-19 crisis, you'd still be eligible to get the amount on the loan that you'd be eligible to get is based off of payroll before this crisis took place. So you'd be able to get an amount or be eligible for an amount that's larger than that, with the intent being that you can bring those folks back to their to the pay rate that they were before COVID-19. And if you do that, this was rolled over into a grant, so it's totally forgivable. You don't have to pay it back.
Okay. Next question. What about a small business that had no employees last year, but added 1 or 2 this year that they needed to temporarily lay off?
So in that case, you can look at January and February employee counts as well. So for businesses that didn't exist last year, you'd be able to look at your numbers from January and February, and then that would determine your loan amount.
Okay. Next question. Has there been any discussion on what happens if the money from the Paycheck Protection Program runs out?
No. And the reason why there hasn't been discussion on that is because I don't think that that's likely. Because as I mentioned at the beginning of the call, I mean, this is the total cost, payroll costs of every small business in America for an entire quarter, for a 3-month period, is $700 billion. So this is half of that. And so I don't think that there's any thinking at all in Congress, or that there was any thinking that this could possibly run out. So it should be a sufficient amount of money.
Okay. Are the health insurance premiums less offset of what EE contributes, or just what is invoiced by the provider?
I'd have to look into that, but as far, I mean, the health insurance is included for sure as part of the payroll costs of the employer. So any obligation that the employer has for health insurance costs for their employees, that is calculated as part of their payroll costs, their average monthly payroll costs.
Okay. And then if I could just have you restate the maximum amount for the Paycheck Protection Loan amount.
Sure, it's your average monthly payroll cost times 2.5. So the thinking is 2.5 months of payroll, or $10 million, whichever one is less.
Okay. What is considered a full-time equivalent employee outside of employees working 40 hours?
The definition for an FTE, I believe, is, I'd have to look into that. I don't want to give false information, but I think 40 hours, but I can look into that.
Okay. Can you apply for an EIDL loan and the,
I think that number's 32 hours a week.
Is it 32? Okay.
It's either 28 or 32. I can't remember, but it's one of those two numbers.
Thank you for that. Thanks.
Okay.
can you apply for the EIDL loan and the PPP loan?
Yes, you can. The money just cannot be used for the same thing.
Okay.
And there's an option too, at some point, although Treasury hasn't provided guidance on this, to roll over the EIDL loan into the PPP as well. If the EIDL, for example, is used for things like payroll or rent, utilities, things that are typically covered by the PPP, you could potentially roll that into the PPP as well, which would mean that it'd be forgivable. But it's kind of unclear as to how that's going to work.
Okay. So if you apply for and receive the 10K Advance Emergency Grant, can you use that for anything? And does that make it so that you can't get the PPP and the remaining amount of your EIDL loan?
If you get the PPP, then that would be deducted from the amount that's forgivable or eligible to be forgivable from your PPP. So you can get that 10,000, just understand that that would be deducted from the PPP forgivable portion. And it can be used for things that are typically covered by the PPP. So the 10,000 could be used for utilities, rent, payroll, but then also for supply chain disruption, other debt obligations that you aren't able to make because of a decrease in revenue. So you have kind of a few more things that you can use for that.
Okay. Next question. Is there a published form for the EIDL loan?
A published form?
Yeah.
The SBA, if you go to their website, they have a good amount of information on this, and then it's become a lot clearer than it was last week. There was a lot of confusion as to how to apply for this because the SBA's website was kind of a mess, and so they've been able to clean that up quite a bit. So if you go to the SBA.gov or just look up SBA kind of disaster loan or SBA disaster loan application, their website's pretty clean and easy to understand. You can apply for the loan there, and then also that $10,000 grant, and it should take between 15 and 20 minutes or so. So it's pretty straightforward.
Okay. So next question, hang on, it just popped on me, so I gotta find it again. Okay. For the PPP loan, do you have to roll some of it into a loan, or can it all be the grant that is forgiven?
That depends. So the part that's forgiven is expenses on payroll, rent, interest on mortgage, utilities for an 8-week period after origination of the loan. So if that's the entire amount that you were able to take out from the bank, then that means that it was entirely forgiven. If you have some left over that you took out from the bank, then that would be subject to typical loan terms. Like I mentioned, 4%. Loan term around 10 years or so.
Okay. Next question. As part of the PPP, what defines utilities? Also, are unemployment taxes paid to the state able to be included in the amount for the average payroll? So there's actually two questions there.
I'd have to check on the last one. I believe so, but I'd have to check on that one. And I can get back to you and get back to Sally as well on that. What was the first part of the question again?
So the first part was, as part of the PPP, what defines, and then they ask if utilities are, I'm assuming.
Sure. So yeah, I mean, as far as I understand, just electricity, water, things like that, kind of typical utility costs. But I can look into that to see if they have specific language on it, but that's my understanding.
Okay. Next question. What part of the EIDL loan would be forgiven?
The EIDL loan is not forgiven. So you have the $10,000 upfront cash advance grant that you can get access to. That would be forgiven, but anything on top of that is not forgiven. You'd be subject to either a 3.75% interest rate if you're a small business, or 2.75 if you are a nonprofit.
Okay, and then we do have a confirmation that 30 hours a week is considered full-time according to the IRS website.
There you go. Very nice. Thank you.
So next question, does the prepay penalty still apply for this SBA product, the PPP loan?
I'd have to look into that. I haven't seen anything on that. The prepaid penalty, I'd have to look in.
Okay, and I'll get you the transcript for all of this too.
Okay, that'd be helpful.
And last question, for self-employed who do not do payroll, but rather the net income as their income, is that considered the payroll for self-employment?
I believe so. I'd have to double check. I've been trying to find out about this too, because there's been some confusion that I've seen on that. But I believe so. So I believe it's based off of your most recent tax filing, but I'd have to check. Okay.
And then we do have a confirmation that came in that says there is no prepayment penalty on the PPP loans.
Very good.
So just as a final sort of differentiation, one thing did pop in, just to ask for a little bit of clarification in regards to the EIDL loan, just to make sure people understand the EIDL loan is not a grant. That's correct?
Right. Exactly.
Okay. And that's all the questions that I have.
Does anyone else have any questions that they want to ask? Unmute yourself. Looks like Jan just popped in with a question. Do you want to just say your question? Bob, you want to read her question?
I will. So Jan's question, can you furlough employees that have no duties due to the COVID virus and still receive the PPP loan? And if so, what percentage can you furlough?
Yes, you can, and you could still receive the PPP loan, and the amount that you'd receive would still be based off of an employee count before you laid those folks off, due to COVID-19. And then once you get that loan, the assumption is that you would use it to bring those folks back. And you'd want to bring all of them back, because if you don't, then you will get dinged slightly. So the amount that would be forgivable goes down proportionally for every employee that you lose or that you fail to bring back. And you have to do that within 30 days. So you have to do that, like I said, by April 26th, you'd have to bring those folks back. And you'd have to restore their pay to at least 75% of what it was without seeing a ding in your ability to have it forgiven.
Okay,
Hey, Bob.
Yeah.
Bob, this is Craig Lohman. I wanted to follow up on I think the first question that came in was related to direct deposit accounts. And I think that was geared towards the individual stimulus money coming in, if I'm not mistaken. The IRS is going to use whatever you used for your 2019 tax return. If you have a direct deposit account on there, they'll use that. If you haven't filed 2019 tax return, they'll look to your 2018 tax return and use that account. If your account number is changed since then, there's not a way at the moment for the IRS to get that information right away. They are working, my understanding, in the coming weeks, the IRS is developing a web-based portal for individuals to provide banking information so they can get direct deposits for those. So I don't know how quick that's happening, but that's the word we got from the IRS.
Thank you, Craig.
Thank you, Craig Lohman of Lohman PPLC. We did have one other question that came in, and this may be repetitive, but can you confirm the PPP qualifications? For-profit LLCs or corps will not be eligible? I was confused when this was first spoken of.
So the PPP is for small businesses that have fewer than 500 employees. And it's also eligible for independent contractors, sole proprietors, folks that are self-employed, and then nonprofit 501c3s. Oh, and then it's also important to mention too, which I forgot, is that for the hospitality and restaurant industries, this is based off of a less than 500 employee per location. So even if the restaurant has more than 500 employees, as long as per location it's fewer than 500, they're also eligible to apply for the PPP loan.
Thank you, sir. And then
Hello.
one last one that did kind of squeak in right here. For the self-employed, can they use their 2009 revenue even if they have not yet filed taxes for 2019?
That's a good question. I think it's going to be based off of their most recent tax filing, but I can double check.
Okay, thank you, everybody. We'll get answers to the questions that were not able to be answered on the call. So again, make sure that we have your contact information so that we can follow up with you on that. Sally?
Any last thoughts? Any last questions? Jennings, we so appreciate, I know how busy you are. Appreciate your time today. I think you gave a lot of good information and probably got a lot of people thinking about things that they need to follow up on right away.
Okay. No, thank you. Thanks for having me. Happy to help.
Sure. Jennings, do you expect that there will be a lot of changes and maybe we need to do this again at some point?
Sure, if you'd like to, particularly after we get kind of a little bit more guidance from Treasury and after we see these loans start to hit the ground, hopefully by the end of this week, but by next week. If you'd like to follow up, that'd be great too. We could do that.
Anybody interested in that?
Yes.
Great. Okay. Well, we'll work with Jennings' schedule and see what we can do. But in the meantime, if you have questions, Jennings, do you want them to get the questions to us and us send to you,
Yeah.
or okay?
That'd be great.
Try and consolidate so you don't have 100 different emails coming in. But sure, appreciate your time. And as soon as we hear back from Jennings on the questions that he didn't have specific answers to, we'll get that out to all of you right away.
Yep.
All right. Thank you, everyone. Appreciate you being on.
Thanks. Thank you.
Have a great day. And some of you, I've seen you at least twice today already. Have a good one.
Thank
you so much. Stay healthy, everybody.